I think family offices today should look at real estate if they're not looking at it. I think a lot of them just like to write checks without doing the work, and that's where they get burned.
Welcome. Thanks for being here. Can you tell us a bit about you and what do you do at Dinesh Hinduja family office?
Rodrigo, first of all, wonderful to catch up with you. Really looking forward to this chat. And let me tell you a little bit about my journey as well as what we do at the family office. So, our family built India's largest garment export firm. This is back in 2007. We were the largest in the country. And then we sold it to Blackstone Private Equity after that. Right. And so that was 50 years of hard work coming home. Ever since we've been managing our own capital. And a large part of our capital is in real estate assets. And it's been a fascinating journey. We still love it. We still love what you're doing at GRI. We love the format. Thank you for bringing it to India.
What's the appetite for family offices investing in real estate as a whole? As you said, your portfolio is basically formed about majority of real estate, but how do you see in general the appetite for family offices in India?
I think for a lot of family offices, real estate in India has been a legacy asset. It's something their grandfather bought 20 years ago. It's inheritance. It's maybe their father bought a few floors in a building. They all own several homes, maybe a 5-acre, 10-acre farm. This is all pre-2017 and 18. What's happened in the last 8 years is it's moved from being a legacy asset to being actually an institutional asset, to being an actual asset class, because all the opaqueness, all the questions around governance have also got clanked up because of regulation, right? RERA came into India. We've got GST rationalization across the state. We've got demonetization, right? So all the, I would say, externalities that made it hard for family offices to invest into this have actually, reduced. People are now actively looking to own commercial buildings. They don't mind spending $100 million buying a building that's, grade A tenanted. They don't mind. They're less interested in land because land is again nuanced in this country, right? There's a lot of things that happen around land. They much rather buy clean cut assets built by top tier developers where they know title's not an issue, there are no other sort of miscreants trying to poke fun and disturb peace. I think in India, as wealth grows, and wealth has been really clipping up here as people exit businesses, you are seeing now people wanting to own a portion of their financial portfolio to have real estate. So I think we're on the right trend. Still way to go.
Talking about asset classes,
Yeah.
is there any preferred one for you?
For me?
Yes.
Yeah. So for us, it's commercial real estate. So
Mainly commercial.
Mainly commercial real estate. We like the yield, right? We like the yield. We like owning a full asset. So our preference is to own a full building. And because then you can also control it. If you're a strata owner, then you have to think about who's managing the property. So we have a dedicated team that looks after all our assets.
Equity or debit?
I think, let me talk two ways. For us, it's always been equity, self-building, self-development, working with partners, right?
Okay.
But when it comes to one very important point which folks need to understand is post April 1st, 2023, the taxation on debt mutual funds in India shifted. They used to get a lot of benefits where you could yield roughly about 7.3, 7.5% post-tax in your hand. So think about it. If you had $100 million, you could make $7.5 million with almost sovereign rating, which is nice, right? Of course,
very good.
Keeping in mind inflation, and inflation's been dipping. The budget switched that over, right? Now, that entire 7.5 is taxed at max marginal, which makes it drop to 5%. Real estate credit is now taking that spot.
And what do you think is the key point for families on taking a decision to invest in real estate?
I think there are multiple. One is yield. Two is risk. It's a physical asset, so they feel nice. Even if it's, for whatever reason, untenanted. They're like, what'll happen?
You own it.
You own it. Maybe instead of 3 months, it'll take 6 months to get back a tenant, right? And three, I think there's also a prestige element, which in India you have to, which happens in hotel acquisitions. It's like an ego booster.
Okay.
I own the St. Regis, right?
Okay.
And
It's my
it's my hotel, right?
Okay.
And even though the net return may be
Okay.
2% an annum, it's just a prestige factor. So I think a lot of that's also coming into play. So it's interesting to see some of that play out, because I think wealth is also grown, where somebody could put $50 to $100 million on a hotel and it makes no return, but they're just happy.
Do you have hotels in your portfolio?
No, we don't, because we are very financially focused.
Okay.
Everything needs to bring a yield.
No plans to have hospitality as part of.
Unless I make it myself. Money in a hotel is made by making it yourself and then flipping it. It's not made by buying it. If you buy it, you're paying full price.
What kind of risks do you see for the family offices? What worries then when taking a decision to invest in real estate?
I think family offices today should look at real estate if they're not looking at it, number one. I think they need to figure out across the spectrum where they're comfortable playing, because each part has a different risk, return, and liquidity profile. And they should be open to working with advisors and independent advisors and counselors to work through the nuances. I think a lot of them just like to write checks without doing the work, and that's where they get burnt. You write a big check, you didn't do the diligence right, you didn't figure out there are some fine print on the title, there is some fine print in the operating lease. I think that's where they get burnt. So I think, honestly, in India, people now need to understand they need many advisors. Like they have a lawyer and accountant, you should have a real estate advisor.
Location-wise, how is the decision for family offices to invest? Do they generally invest on the regions they are based off, or do you see any pan-Indian investment from any family from the north investing in the south, or it's very localized?
Typically localized, because there's elements of saying, I know the space. If there is a problem, I have enough of a network to solve it. So I would say 80% is local. But I think as you get bigger, so it depends on the size and scale of then there's only so much you want to stay local. Say if I'm $500 million in assets, does it make sense for me to put $500 million in my micro community? No. I need to diversify. I would even need to go offshore. I should be putting money in London.
That's going to be my next question.
Yeah. So like today,
international appetite.
I think today London's in a great spot.
Yes.
Right? There's a huge exodus.
Majority is going to Europe. You think London?
I would say London. People love London. While there are opportunities, and I have seen deals across Europe with a very good cap rate, even from a British pound perspective, much better than Singapore. For resi, London becomes trophy assets. People like to own a home. It's again, there's no relation to tenanting, there's nothing. It's just own it and keep it.
Do you think ESG, we have not talked about ESG.
Yeah.
How do family offices see ESG? Do they care about it?
So I think in India, it's slightly different. It starts with the numbers. So it's commercially, what's my yield? Then I would say ESG norms. But people are getting a little more sensitive, because the end user, if it's a large corporate, is actually asking the developer, are you platinum, LEED certified?
Yeah.
Do you have efficient air conditioning?
Stars, etc.
I think it's percolating not because the family offices are asking, but because the end customer is saying, I'm only seeking something that's compliant with all of this.
Is there any message you'd like to send to our audience?
The way I look at India, I spent half my life in the States, but I see how I look at India today. I think the next 10 years are amazing. I think this is a country that's got everything going for it, from GDP growth, young population that's spending money. There's tons of opportunity within India, within the real estate space. And I think folks should definitely consider, I think, coming here, experiencing, learning about it. You've built a phenomenal platform for them to come and learn in a nice, private, closed door way. Exactly. I think they should definitely, be here at the next GRI.